What's up, everybody? Michael Silva here. The Fed came out today. They raised their 25 basis points. The markets didn't do much unless you're paying to the chart intraday where we saw lots of chop. Now, it's Wednesday. Tomorrow's Thursday. We have 2 more trading days left in the week. And let me tell you this, still continue to be prepared for volatility, as we've been seeing a lot of chop this week so far. So we're going to talk about the new expected moves on this Stock Market Brief show. If you're new here, welcome to the show. Make sure to hit that thumbs up. It's greatly appreciated. And subscribe to the channel if you haven't done so already. Okie dokie. We're going to be getting into it today. As we know, this SPY, if you watched yesterday's episode, the SPY on the 15-minute time frame did not hit its daily expected move today because, well, the market was unchanged. Okay, the Qs on the 15-minute time frame did not hit its expected move. So we're going to be updating these and showing you them later, but I want everyone to be aware that we do still have, the Fed came out, right, did their hike, saw the volatility. Tomorrow we got durable goods, we got GDP growth numbers too as well. That's going to come in 1 hour before the market opens. We have some other data coming out as well. And also, if we look across the world, we have ECB coming out for their interest rate decision. So there's going to still continue to be volatility, but it doesn't end there. We also have earnings come Thursday, and I'll share some of these charts with you today. So before the open, we got RCL, we got McDonald's, and so forth down the list. Today, after the close, we had Meta. What did Meta do? Meta burst to the upside. It had a $25 expected move, and it tagged it from basically 300 to the nose, to the button, right there at 325. Now, tomorrow, we have McDonald's. McDonald's chart is one that I've been paying close attention to. I wanted to get through earnings, seeing a little bit of a pullback here, hammer candle with some nice volume right at that 50-day moving average. So I'm still looking for a potential break of 300 at some point, but I want to see how earnings plays off, and if we get maybe potentially gap up, or if we tighten up more. I mean, we're sitting around all-time highs for McDonald's, and we broke out of here. It's a good-looking chart. What would make it make it not looking good is if we gap down gigantic and we come down to test that 200-day moving average. Then I'm gonna have to wait to see what price action does at that point. Now, RCL is another one that we'll be reporting, and let me tell you, this chart also looks pretty good, so I'm going to see how earnings come out. There's another one, too, that I'll share with you, but you can just see the price action here is getting pretty darn tight, coiling up into earnings. So if we start breaking out, that might be a continuation type play. Notice how price action expanded, contracted. A breakout could be a potential opportunity there. If we start down lower, maybe look for a potential red to green type of day. That could be potentially positive. Another one to watch is CCL. They're not reporting earnings. This is one of the trade ideas I shared with my Discord group today. And I just wanted to call out that this, I mean, look at this thing. We reported earnings, I believe, right here on this date. It went down, but then we skyrocketed up. And this thing is flagging very nicely here, consolidating. And just take a look at this volume, how the volume's drying up, right? It's the same thing with the volume, right? Volume contracts and then it expands, right? It gets very, dries up, and then all of a sudden we get a burst in volume. And it's always good when we see strong moves to the upside, if you're bullish at least, right, with big volume accumulation to the upside. And then while we're pulling back and retesting some moving averages, it's nice to see volume dry up here. So what would be really nice is to reclaim that 20-day moving average, start to see a big burst in volume to potentially try to swing for that 19.5 again and potentially higher. Another one that's reporting is MasterCard, and you can't really complain about this chart over here too as well. You can see we had this cup with handle formation, right? You can just see basically volatility is contracting and it expanded, then a higher low, and then we broke out, and now we're kind of just floating right around. So we'll see what earnings does, but it's also another good-looking chart as it stands right now. Earnings could wreck it. I mean, look at Snapchat, right? Snapchat opened up 18% down. I don't expect MasterCard to be doing that, but who knows? That's why I don't really trade earnings all too much, or too heavily, I should say. All right, let's get the updated daily expected moves on the SPY. 458.01 to the upside, 453.01 to the downside. As you can see, we did a lot of chop, and what you'll notice here is what? The 5-day moving average is literally just holding it all together right now. We're above the week to date, we're above the 5-day moving average. It's starting to level itself out, so you just want to be cautious if we start breaking down to maybe retest or to test the lower daily expected move. Remember, there's a lot of volatility, right? We can see 2 sigma moves still. So, just be aware if we start breaking down from the 5-day moving average, seeing if it back tests, creating lower highs and potentially breaking down further. But as it stands right now, it could simply do U-turns, and we're just contracting sideways. Yesterday we talked about this being the potential for, a little tiny cup with handle right here. This was, you know, Fed came out, boom, we came up, retouched this area, and it's really just going sideways. That's all it's doing right now. So we got to wait for the break to be a little bit more precise. Now, if I zoom in on the 2-minute chart of looking at today's price action, this is just for the day, what you'll see is here is, you know, it was just a choppy day where, you know, we came down, we moved up, we came back down, and then all of a sudden the Fed announced. And what I'm doing right here is I'm anchoring a volume-weighted average price to that, and what you'll see is the average person, based off of when the announcement came off for the Fed hike decision, is actually in the green because we're above that line. So you'll want to see if we can hold up above this line. And if price starts to break out further, what we have here is an order block right at about 456.50. Order blocks are typically where large orders were placed by institutional traders, potentially hedge fund traders. So this right here is an order block which could be a level of potential resistance. All right, and if you just look across the screen, that actually matches up with this prior, you know, right around this prior swing high right over here, which is, you know, very similar to, from a fractal standpoint, where we see, you know, this type of action. Okay, so that's what I'd be looking at from the, you know, more intraday time frame, and then the 15-minute time frame, which is also intraday, where I'd be careful if it gets under the 5-day. But as it stands right now, I mean, the door's still open to head higher, but you want to get there by holding, obviously, these levels, right? So the risk to potential reward could still be up to the upside, but, you know, if we start cracking down, be careful. Simple as that. The Q is on the 15-minute time frame. So the new upper daily expected move, new lower daily, 380.79 to the upside, 374.25 to the downside. You can see here the 5-day moving average is still declining, and what is this doing? It's holding as resistance right now. We're above the week to date and we're above the quarter to date, which is the green line. And as you'll notice, just look at this anchored volume weighted price right here, how price literally for the last couple of trading days has just been doodling. It broke out of this, right? So expansion leads to contraction, contraction leads to expansion. We broke out. We talked about testing the 5-day moving average. It did. Where did it come to? It came right back to the quarter to date anchored VWAP. Okay, price action kind of coiled up within this little area here. Fed announcement, boom, we blasted up. Everything was good. And then we came right back down. And then we came right back up. Okay, we are still right there at a declining 5-day moving average. So what you want to see is price to be bullish, to get back above it. And you want it to hold the quarter to date anchored VWAP. If we can get above it and hold above it, it opens the door to the upper daily and the upper weekly. But if we start breaking down, that opens the door to the lower daily and the lower weekly. If we take a look at the 2-minute time frame, so we'll zoom in intraday, I'll show you a couple of the order blocks here too as well, which are just potential areas of resistance. And you can see there's some more overhead resistance here. We had a pretty big sell order into the close of the prior trading day, so that can act as a level of resistance. If we get above these levels, right, if we can get above these levels, it opens the door to here, and then obviously the upper daily expected move. And then you can see we have that anchor VWAP, and we did close above that as it stands. So you want to just pay attention to where the low of the day was, right? The low of the day was pretty much just right here, almost a matching low right over here. So if we start taking out these levels, just be cautious that it's likely, you know, it increases the odds to come tag the lower daily expected move. So if you were to go long here, say if we open up flat, I mean, chances are we can gap up because of meta, we'll see. But then you have a stop here, and then you have a stop under this or under the low of yesterday as a potential play where you're risking, you know, this much to potentially get all the way up to the daily, or even potentially up further to the upper weekly expected move if you want to play it from a bullish perspective. If I take a look at the summation index for the NYSE, you can see that we're still in a bullish trend here. However, as price is kind of squeezing itself a little bit higher, we have that negative divergence, as you can see more clearly on this chart, which we depicted yesterday in this rising wedge format. So, you know, broad market internals are showing weakness. Doesn't mean that we can't change that, but just note that we've been kind of just pinching ourselves tighter and tighter, and it's likely to see increased volatility here in the near future. Now, I want to show you a couple other charts. This one's semiconductors, SMH, and I just wanted to call out that we've been in this pretty bullish channel, and I'm just laying out a couple of areas to pay attention to. The last time I talked about this chart was actually right here on this breakout, how price is coiling up. The time before that was this potentially being a really good short, and as you can see here, we broke down. I traded this as on the short side to right into this area where price didn't really go down further. It took a little while, and then we finally came down just a slightly bit, but it was rather flat over there. And you can see these trend lines, they've been holding, boom. But once they're broken, these levels of support, they can flush down to the midline, to the low line or the upper line of the trend channel. Okay, as you can see, we flagged over here. We broke out to go where? The upper line. Now, I wanted to call out that we do have a pretty clear area that's been holding as support. You can see it acted as support here, 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 and right now we're bouncing from that level again intraday to day. Okay, so I'm thinking that if we start breaking down from this level, that's going to open the door to come hit the midpoint on this bull channel, potentially even lower to the lower end, but just note that it still would be in a bull channel even on a steeper pullback. And you can see also momentum is slowing there by looking at that MACD. So I'd be paying attention to that for a potential if we start breaking down from that level. It just hasn't happened yet. Okay, another thing to watch very closely is Apple. Apple, the last 3 or 4 trading days, has been coiling up, getting very tight here. And this trend right here, this trend line that I'm pointing out, this thing looks just like a straight algorithmic, very tight, you know, offers very little opportunities on pullbacks. You have to be very quick and aggressive, and it's just very, very consolidated. So what I'm thinking here is just be very careful if this breaks. If it breaks, a lot of times you get back tests, and then all of a sudden volatility starts really picking up when we get these trend lines to potentially break. So I'd be watching on this to be cautious if we start breaking down from those trend lines as well. That's all I got for you on today's episode, everybody. Hope it helped out, gave you some insight into the overall markets. That's all I got for you. See you later.